Hello and welcome to Trading Hour live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me is Hormuz Fatakia. Well, last day of the trading week. It's been a long week. But for today, bulls are cheering. So far, we are at the day's high, comfortably above the 25,100 mark for now. We'll have to see which way things go. We've seen a lot of choppy activity in the last couple of trading sessions, but we'll see which way things end for the week this day so far. At the day's high, 125 points higher and some big names contributing to the gains that we are seeing as well. ICICI Bank at the day's high. We have Reliance Industries, which is at the day's high. A lot of contribution coming in from the banking names, actually. Kotak Mahindra Bank is also seeing some recovery from the lows. That stock is also doing really well. We do have Axis Bank, which is at the day's high as well. Some of these insurance names, be it SBI Life or HDFC Life from the Nifty pack, they are contributing. Of course, they are also at the day's high. A lot is happening with this entire space when it comes to the GST cuts and passing it on to the consumers and that input tax credit as well. So we'll keep tracking that story for you. This is what's happening as far as the benchmarks are concerned. But let's talk about the mid caps overall and the small caps as well. What's happening in the broader markets? Hormuz is here with us to put the spotlight on top movers in the market this hour. Hormuz, tell us more.
Well, before I get to those names, the Nifty is nearing a very important level. It's 25,154, which is the recent swing high that the index had made on the 21st of August after the Prime Minister's Independence Day speech, buoyed by those GST rate cut hopes. So we are very close to that level, almost just 20 points away from that. Well, the broader markets are doing fairly well for themselves as well. And some of the movers in today's session, the first one on the list today is Themis Medicare. And it's a 20% upper circuit for the stock, the biggest single day gain after June of 2021. It's gained in 5 out of the last 6 sessions. We have already had more than 10 lakh shares that have been traded today compared to a 20-day average of just 22,000 shares. And as a result of this move, the stock has broken above its 50-day moving average of 111 and is now closing in on its 100-day moving average, which is at 124. But despite this move, the stock has been a major underperformer this year. It is still down more than 50% year to date after having gained for 5 straight years in a row. The other name on the list today is Punjab Chemicals and Crop Protection. That stock is now up almost 13% and is the 4th straight day of gains for the stock. It's gained more than 15% now in this 4-day gaining streak, majority of them coming today. We've already had 4 lakh shares of the stock change hands by the first couple of hours of trade compared to a 20-day average of just 12,000 shares. So very high volumes on this stock. It's also broken above its 50-day, 100-day moving average of 1184 and it's also now moved above its 50 DMA, which is at 1251. And the stock has also extended its gains on a year-to-date basis as well. Hitachi Industries was up yesterday, is up today as well, was up 20% yesterday, another 13.5% in today's session. It's up 35% now in the last 4 days. And we have already had 12 crore shares change hands in the first 2 hours, which is higher than yesterday's volume. And the 20-day average is 27 lakh. Yesterday's session had 11 crore shares change hands in the entire session. We've already had 12 crore in the first 2 hours itself. It's trading now at the 100-day moving average and the 200-day moving average is at 43.40. So another important level on the upside to watch out for on Hitachi Industries. And lastly, a news-driven name, JBM Auto, is one such stock up on back of news flow, of course. 10% higher on the stock, gained in 5 out of the last 6 sessions. We've had more than 1.5 crore shares that have already changed hands compared to a 20-day average of 1.5 lakh. And the stock with this move has now moved above its 200-day moving average of 677, but still an underperformer so far, down 11% on a year-to-date basis, Sonal.
All right, some interesting names there, such big movers in the broader markets. The market generally has been doing really well today, but we have to talk about a big story, capital market stocks. All of them are in focus today. Vamakshi is here to tell us why did they fall yesterday, what's happening, the F&O positioning, volumes, delivery picture. There's so much to talk about, Vamakshi, but let's start with this first up.
Well, absolutely, Sonal. Yesterday there was a fall in all of these capital market names. There was a story that was done by our colleague Yash, and sources were suggesting to him that SEBI is likely to float a consultation paper in order to phase out weekly F&O contracts within a month. And in fact, SEBI is also weighing a transition to monthly expiry. Now, in addition to that, they also said that regulators are likely likely to consider a same-day expiry across both the exchanges, NSE as well as BSE. Now, yesterday on the back of this news flow, we did see a very sharp fall in all of these capital market names. Take BSE, Angel One, Nuvama, 361. All of these counters fell anywhere between 2 to 5% yesterday, and the F&O positioning also indicated that the fall in the stock was accompanied with a rise in open interest, which indicates that fresh shorts were added for all of these counters. Now, take a look at the volume as well as the delivery stats. Now, let me first look at the volumes. Now, the volumes yesterday were approximately double the 30-day average for BSE, Angel One and Nuvama. 361 WAM was, of course, an exception because volumes out here were almost half the 30-day average. Now, let's take a look at the delivery. The delivery for most stocks, if you compare it to the 30-day average, is not starkly different as compared to what we had yesterday. So that is what actually happened in the trading session yesterday, and that is how the volumes and delivery looked.
Okay, all right. But that's about the delivery stats, Vamakshi. In fact, Jefferies has done a scenario analysis on potential impact of elongated expiries on BSE and Nuvama as well. Tell us more about that.
Well, absolutely, Sonal. So in the first scenario, they're looking at, and this is for BSE, they're looking at fortnightly expiry. Now, in case there is a transition to this, they believe the industry index options notional average daily turnover could decline by almost 55%, while the premium ADTO could also see a dip of almost 45%. Now, in this scenario, they've taken two cases wherein if the expiries are on different days. Now, if that is the case, the market share is expected to likely remain stable at 29%. The options revenue, however, could dip by 38%, which could lead to a 22% fall in the total revenue and a 21% fall in the net profit. Now, apart from that, if there is the same day expiry under the same scenario, that is fortnightly expiry, the market share here then is expected to fall to 20% for BSE. The options revenue is expected to see a much sharper cut of almost 57%, leading to a 33% drop in the total revenue and a nearly 35% drop in the net profit. Now, the other scenario is for monthly expiry. Out here, they're expecting a much sharper fall in the industry ADTO of almost 80%, and the premium ADTO is also expected to decline by almost 70%. Now, again, two scenarios out here. If the expiry is on the different days versus the expiry on the same day. Now, if expiry on the is on the different days, meaning the market share is likely to remain stable at 29%, but the options revenue is expected to decline by 67%, total revenue 39%, and net profit 41%. But if there is a same day expiry, the market share could decline to as much as 18%. And options revenue, it's again over here, it's a much sharper fall. 80% decline is what they expect. Total revenue minus 46%, and net profit could also decline by almost 50%. And the next scenario analysis is something that they've done on Nuvama. Now, they believe that this could impact primarily its asset services segment. Now, if there is a shift to fortnightly expiry, the impact on profit could be around 15%, and there could be a profit impact of 25% in case there is a shift to the monthly expiry. So, just to sum all of this up, basically the potential impact that Jefferies believes could range between 20% to 50% cuts to FY27 EPS for BSE and 15 to 25% for Nuvama.
Interesting report that from Jefferies, but Vamakshi, there has been a significant correction that both BSE and Nuvama have already had from their top. The BSE shares are down almost 20%, Nuvama is down even more. So, based on this scenario analysis, how much of it is already in the price, and what could be the further road ahead for these companies? Well,
absolutely, Hormaz, you're right. Now if we compare how these stocks have moved after hitting a high in 2025, BSE, like you said, is down almost 27%. Angel One is down 32%. Nuvama again down 26%, and 361 WAM down 19%. And Jefferies believes that, the stocks have already corrected significantly, and they feel that the fortnightly settlement with separate settlements is already baked into the price. But in case there is a scenario wherein the fortnight early expiry comes into place, with same day expiry and monthly expiry scenarios play out, then the shares could see further fall. Now, when we talk about the valuation, now Jeffrey sees that the valuation for BSE and Novama is reasonable at 38 times and 18 times FY27 PE respectively. So therefore, they don't see a material derating. But today, Hormaz, all eyes will be on the SEBI board meeting, and we'll be waiting for what comes out of it.
Indeed, we'll be talking about this when we return next week, and important updates there. Vamakshi, thank you for taking us through this big story of the day and, of course, for the evening that lies ahead of us as well. Take a short break. The index still at 25,125. It'll be a good time to get in some chart ideas from Aditya Agarwala from Invest for Edu, who joins in on the other side. Welcome back. Paused for the 8th straight day of gains is the index, 120 points higher, heading towards that August 21st swing high as well. Aditya Agarwala from Invest for Edu is joining in. Aditya, good morning. Thank you for joining in. Now, with 8 days of gains, do you see some exhaustion at upper levels, or do we cross 25,154 and move even higher? What's your call on the index and your stock recommendations for the morning as well?
Morning, Hormuz. Thanks for coming on the show. My sense is this is going to extend. What started off as a tepid Friday morning session is now looking strong, both on the Nifty and the Bank Nifty. And especially, Hormuz, for the Bank Nifty, it's more exciting because we saw a dip early morning of 60-70 points. And from there, it's building on and led by large cap private sector banks, which is a healthy sign. So my sense is from here on, you will see incremental gains more on the Bank Nifty, could easily scale past levels of 55,000 on the Bank Nifty in the coming trading week. And then you could also see levels of 55,500, 56,000 as well on the Bank Nifty. So I'm quite upbeat on the Bank Nifty. And from here on, my sense is Bank Nifty will build on to these gains. I don't see any exhaustion both on the Nifty and the Bank Nifty anytime soon. Even for Nifty, my sense is this intermediate hurdle, which is 25,150, which was the previous swing high, should get breached either today or next week, and we should test levels of 25,400 on the upside next week, sometime next week. So overall, my sense is this upward momentum that we are witnessing in the markets should continue both on the Nifty and the Bank Nifty, while your broader markets could take a little bit of a backseat and large cap indices could outperform from here on.
So any picks from the large caps, or is it largely from the broader markets?
It's a mix from broader markets predominantly, Sonal. The first one is from the auto space, because this is clearly buzzing and then there seems to be no stopping this space. So Ashok Leyland is something which is looking quite interesting to me at current levels. I would recommend a fresh long addition in Ashok Leyland for a target of 142 on the upside with the stop loss at 132 on the downside. The second is from the defense space, because this has made a comeback and it's a strong comeback. So BEL is looking quite interesting to me at current levels for a fresh long entry for a target of 410 on the upside and a stop loss on the downside at 387. So BEL and Ashok Leyland, these are two top recommendations from my side.
Okay, all right. Thank you so much for joining in, and have a great weekend ahead. That's the technical check on the markets, but let's go across to Mangalam. He's bringing us all the trends from the F&O space this morning. Mangalam.
It looks like the market got a booster shot ever since you guys went on the air, Hormaz and Sonal, because the Nifty has moved towards the higher end of today's trading range, and it's been led by two engines which have been doing well for the markets in the earlier part of the week. We have the Nifty Bank as well as the Nifty IT index. Yes, there was a pause for breath yesterday for the IT index, but it's back up today as well. And the Nifty Bank doing well after a long spate of underperformance is something that, the bulls would like. The important part for the Nifty, now that it's just under that 25,150 mark, the 25,154 mark, very, very crucial, because, ever since the Prime Minister's speech on the Independence Day, we saw a big rally all the way up to 25,154. That got fizzled out. So conquering that level would be the first milestone for the bulls to cross. For the Nifty Bank, it accelerated after it conquered the 20-day moving average comprehensively. So right now it's above the 20-day moving average. If it sustains above this level, then we have a headroom for almost 1,000 points on the Nifty bank, because the 100 and the 50-day moving average come only close to 55,700. So that would be a technical, free run for the Nifty bank. So that's something we will watch out for. The other positive thing, the advanced decline ratio, that's doing well as well. So 1,700 stocks in the green for about 1,000 stocks in the red. Those lines are far and wide apart, with the green one much above the red one right now. The India VIX is lower as well. So that's telling you that, the street is seeing some put writing. So that's visible on, the options side as well. And there is short covering at the 25,000 call. Now that the Nifty is above that 25,100 mark. So the 25,000 call comes up for you. That's seeing some short positions being unwound. And we are seeing put writing at 25,100 and 25,050. What that tells you is that, the support has moved higher. Psychologically, 25,000 now becomes an important mark as a support. If everything is good, what is the only fly in the ointment? The only fly in the ointment, or the only worry, is that are things getting slightly overbought right now after 8 days of a rally? The put-call ratio is at 1.34. Typically, the put-call ratio peaks out closer to 1.25, 1.3, but now at 1.34. Let's see how it goes 2 days ahead of the weekly expiry, which is on Tuesday. One stock I'm watching out for is HFCL. After the big open interest surge on that stock, it's definite that HFCL may come into F&O ban if it sustains at this level of open interest, because it's above the threshold level of 95%.
Okay, all right. Thank you so much for joining us with all those cues, Mangalam. We'll do one thing. We'll slip into a short break. When we come back, we'll focus on the crypto market with Manisha Gupta on the other side.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
In Crypto Corner today, we are focusing on major numbers. Well, let me remind you that there are almost 25,000 cryptos or tokens, and the overall market cap for all of this is at around $4 trillion. When you look at the top 10 cryptos in the world market, as per their market cap, Bitcoin, of course, stands first with around $2.3 trillion of a market cap. The dominance continues to be more than 55% onto this one, and this is being created as a world reserve currency in some countries as well. So complete support and focus continuing for Bitcoin. The second one is the leader of all smart contracts, and that's Ethereum, with almost $522 billion of a market cap. And then you have XRP with $177 billion, followed by BNB, which is $123 billion of a market cap. Solana, again, has seen a lot of scalability, efficiency, and efficiency in sense of cost and speed as well, is also at around $120 billion of a market cap. And then you have stable coins, the USD coin commanding nearly $72 billion in sense of market cap. And then there are meme coins as well. You have Dogecoin, which has $36 billion of a market cap, Tron at $31, and Cardano also holding $31 billion of a market cap there. But interestingly, it is about the crypto ATMs, Bitcoin ATMs that is, which seem to be catching up in the international markets there. Remember, in various countries, you can buy, sell goods with Bitcoin. You can pay in restaurants for a coffee by a Bitcoin as well. So when it comes to ATMs, this number seems to be doing quite well as well. Now, this data comes in from Coin ATM Radar, which says that in US itself, there are 30,800 crypto ATMs that you can make use of. Canada has around 3,600, Australia at around 1,900, Spain has 387, Poland not too far away with 300 crypto ATMs there. New Zealand has around 221, Hong Kong more than 200, El Salvador, a country which has adopted Bitcoin as a legal tender of payment, has 200 plus kind of ATMs there. Italy has 200 as well. So there are various countries in Europe, in Asia, especially US and Canada, which are looking at very strong numbers where you can use ATMs to withdraw or put in your cryptos there. Romania has 159 as well. So as I said, this number seems to be increasing. It's not just about buying in ETFs, in spot, in futures and options, and high yielding and yield farming, but it also is about ATMs, a number that seems to be strongly catching up.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back. Still 100 points higher on the index, facing some bit of resistance at that 25,154 level. But no reason to complain. The 8th straight day of gains for the Nifty and set for a second straight weekly advance as well. Just before we call time on the show, some of the stocks that are doing well today are the defense names. Look at MTAR Technologies, up 8.5% now. Astra Micro is up 7.5%. Garden Reach is up 7%. And Apollo Micro, too, trading with gains of 6.5%. So defense as a theme continuing to do well. We call time on this edition of Trading Hour. From Sonal and me, thank you for watching. Halftime report on the other side.